Hey guys, so next up I want to take a look at Shiba Inu. The ticker for this is SHIB, and I'm on the weekly time frame. Now, before I get into this, I should mention that if you're not subscribed and you want to get updates in the future, just subscribe, hit the bell, and then click on all because this is a new channel, very low subscriber count, and because of that, when you type certain coins in the search engine, very rarely will my channel pop up. So if you want to be able to get these analysis videos again in the future, just subscribe. Okay. So yeah, I mean, this is a pretty easy easy analysis as well. You see, we had the big bull run, and since then we've dropped 95%. Just a slow, steady bleed out. We've maintained this downtrend. So you see this downtrending resistance level. We have 1, 2, 3, 4 touches on it right now, and we've done a full retrace right down to where we started. See, I got to mention personally, I'm not really into the meme coins, but if it ends up breaking out of this, I'm definitely going to trade it. Why not? Like, there's a huge upside here. But as far as would I want to hold Shiba in my long-term portfolio, no, I don't think so. I think there's a lot of new meme coins coming out. I don't really see the purpose of this. So as you can see, if you want to trade Shiba, I recommend you draw this line, this down-sloping resistance line on the weekly time frame. And I also suggest that you mark in this range. So this is like the bottom range, mark that in as well. So these are the two primary levels that you should focus on. Now, you see here I have this level right here and this level right here, and they're denoted by like a horizontal line that's kind of like dashed, and I have a colored green. These are just, I marked this because I anticipate these particular levels serving as supports and resistances. So as you can see, right here, it was a level of support, and then here was another level of support. And then once we broke through, it's serving as a resistance right now. So the trading range that I see, it's this bottom range right here, and then right here where I have this green horizontal line, right? So if the price breaks, so we're forming dojis at it right now, so we're getting a lot of resistance here. If the price breaks to the upside, the next level I would target would be this down-sloping level of resistance. If it breaks to the downside, so basically we have like a thicker red candle here, close on the weekly, then the next level the target would be down here at the bottom again, and you just place a stop loss just above here. Even better would be if the price came up here, and then you could just do it. If the price came up to this down-sloping resistance line, which is going to be a stronger level of resistance than the one I have marked here. So let's say you waited for the price to head up to this down-sloping level of resistance, and then you just were patient and you tried to identify bearish candle formation. So for example, let's say the price broke out of it, but by the time the weekly candle closed, it sold off, and then the candle body closed below this level of resistance. You can enter a short position. You place your stop loss slightly above, and you target this this region down here. That could give you a risk-reward ratio of 1 to 5. So for every $1 you risk, you could potentially get $5 in return. And what that would look like percentage terms, you would risk 7.28% to get 36.72%. So again, that's another example. But the problem with these trades, although they're higher probability because they're on a weekly time frame, you also have to risk more if you're wrong for your stop loss. So for that reason, a lot of people like to trade on the shorter time frames. Okay, so you might be wondering what these are. Okay, so in the event of a breakout, I've just marked out potential regions that the price is going to see strong resistance. Okay, so the reason why I selected these ones is because if I take a Fibonacci tool and I run it from the top all the way down to the bottom, so the swing high to the swing low, that's going to give us these levels. Now, the first level here, and when I have these levels, what I'm looking for is confluence. So as you see, this first level here, the 382, in a normal situation, this 382 alone is going to give you some level of resistance more often than not. But when you pair it up with the fact that it is the previous resistance level here, that gives us confluence at this level. So I would anticipate if the price breaks out, this is going to be a strong level of resistance. Now, if we're able to make it through this, then the next level is going to be the 50% retracement level, which also lines up with this cluster right here and this support level here. And remember, support typically will flip to resistance. If that level breaks, you're going to move up to the golden pocket. And this level looks very strong. We have a lot of confluence in this zone, which is this level of resistance right here, particularly as it served as, it was the down sloping resistance line. We had resistance here, and then we had resistance here. So it's this range which aligns with the golden pocket. And then, of course, if this level breaks, then we have up here the 786. So these are the levels that if the price breaks and I want to take a short-term trade, so the price moves like kind of like it stair steps, right? So you'll come up, you get rejected, and then you'll break through and you'll get rejected here and you'll come back down and this will be support. Then you'll come up here. It's just like a wave formation, and then you'll get rejected and come back here. It just works in waves, as you can see, right? So if we're able to break bullish, I'm not that patient. I don't want to just buy in and wait till it's up here because it might not get up here. It might not come all the way up, right? I want to play the swings, right? So if it comes here, I'm going to short, take a quick scalp here. And then, yeah, I anticipate it's going to come back up. Then I can short again and then short again. But I'm not going to be too greedy on the shorts. Maybe I'm just going to target down here. But I'll use leverage to amplify my position so I'm able to get good gains out of it while not, being too aggressive while trading against the dominant trend. Okay, so I'm going to switch the chart again now. And what I want to show you is I'm going to take this to the weekly. And why I think we could potentially be at a turnaround point is right here. So yeah, as you can see, basically the price made a low, then it made a lower low, and then a low, then a higher low. That's called a bullish divergence, and that basically gives you an early warning sign that the price is going to change direction. So might flip from a downtrend to an uptrend, but obviously I would be waiting for this main resistance line to break. So depending on what happens with Bitcoin, it's very possible that the price kind of comes back down here and then just ranges here for a while until these 2 points converge, and then you're going to get the breakout. I would suspect that most likely it's going to be to the upside, but you never know. And that's going to happen around January 2024, where this is going to have to make a decision, although of course it can break out in either direction at any time. So yeah, and let's say if you wanted to trade this, but you wanted to trade on a shorter time frame and you didn't want to have to risk 7% on a weekly trade, come down to the hourly, and I would just try to identify a region of support and resistance on this shorter time frame. So let's say here, obviously, so right here, I would just trade based on this level of resistance. On the 1 hour time frame, you see it was resistance here, 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 here. So we have a lot of price history around this region. So basically, as the price comes up here, you could just look for shorts, right? And then you can short it. Let me just run a test here. So you enter a short position, the price comes up, you sell, assuming that you get another bearish indicator, like maybe a doji forming or something like that, some sort of bearish divergence or something along those lines, and then you place your stop loss just above these wicks. And then what you could do, let's say theoretically you were very, very conservative and you just targeted the top of this range. That would be a risk-reward ratio of 1 to 2.25, which is quite good. You risk not even 1%, 0.50%, and you target, you're trying to get 1.13%. Of course, that can be amplified with a little bit of leverage. So yeah, you can just look for these trade entries that give you a good risk-reward ratio where you don't have to risk a lot of your portfolio. And if you're wrong, you're wrong. It's okay. I mean, even if you're wrong half the time, but you're taking these trades that have a good risk-reward, you're going to be profitable in the long run. Now, what you can do, actually I should bring that back. What you can do is say you take the short, right? And here, and you place your stop above these wicks. You can trail your stop loss. So let's say the price comes down here. What you can do if you're using an exchange like the one I have linked in the pinned comment, you can just pull your stop loss and just drag it to break even. And then you have no risk in a trade. And then what you can do is you can say, oh, I'm going to target down here. I'm going to target the previous day low, right? And then if you're right, so if you're wrong, you break even. And then if you're right, well, then you're getting a really good return on that. So ultimately you would risk 0.50%. and then you move your stop to break even, and then you can get 3.25%. And then obviously if you amplify that with leverage, that's a very, very good trade that you don't have to wait around too long to see the results of, right? So yeah, hourly time frame, just mark out your level of resistance and your support levels and just trade within that. Okay, guys, so that's SHIB, Shiba Inu. Once again, I don't personally hold meme coins for the long term, but I will trade them. I'm not above trading them. And if we break out of here, then these are the ranges that I'm going to target. And it works both. So I mentioned that, yeah, I can look for short-term short positions against the trend, counter trend scalp positions. But also, I mean, if we break above this level here, then yeah, I'm going to target this range. So if I start noticing weekly candle bodies close above this this Fibonacci level here, then I'm going to target up here. And then if we're in the lower range of this and we start closing weekly candle bodies above this, then I'm going to target up here. So I'm going to also play the long position. I'm just going to play based on these levels. So here I'm going to look for a short. If I'm here, I'm going to look for a long. I'm going to try to play the waves all the way up to this 786. And a lot of the other coins, I think they're going to break to new highs in the next cycle. But this one right here, because we did a full retrace, that's a sign of weakness. So I'm not confident that Shiba Inu is going to break to new highs in the next cycle. Maybe we only make it to the 786. Maybe we only make it to the 618. I'm not sure. But I'm just going to trade the waves. All right. Hope that was helpful. And once again, if you're not subscribed and you want updates in the future, just subscribe now. All right, guys. Have a good day. Bye.